So you are neutral on the stock, and investors after this earnings report seem to be perhaps validating that at least mindset. But oh my goodness, did you expect to see what we saw in China growth, nearly 60% up, and consider what we're seeing in iPad and Mac and the margin potential in the Apple homegrown chips in that category? As that plays out throughout the year, might that change your mind?
Yeah, it's interesting, John. I mean, no question about it. This was a phenomenal quarter by any standards. The expectation from the buy side in our conversations was about 108 to 110 billion going into this print, which explains the stock reaction. I mean, the expectations were clearly super elevated going into the print. And the guidance was somewhere around 77 billion, the expectations from the buy side. So we got what people were looking for. We probably got a little more than what people were looking for, but the expectations were so high that that's sort of translating into this sort of a stock reaction. Now, on the China growth specifically, it was very, very impressive. I mean, they did have some easier comps from the prior year, and we do have the fact that the currency moved quite significantly in China from 7.2 RMB per dollar to something like 6.4 now. So you've had about a 12% implicit pricing benefit over there as well. So it is all said and done. I mean, it's undisputably like a phenomenally very strong quarter. And the most impressive thing was really on the gross margin side. So kudos to them for executing so well in this tough environment.
Now, Krish, Wamsi's neutral. On the other hand, for you, Apple's one of the best ideas. So why is this kind of a multiple justified? I mean, trading at more than 30 times at the size it is, even given the growth potential, that's quite a valuation.
Yeah, fair enough, John. I mean, the reality is that, I don't look at Apple as a single product company that people used to look in the past. And also when I look at the hardware side, you have iPhone, the wearables, the Mac, the iPads are growing. And then on the services side, it's not one single line item. You definitely have App Store, you have the payments, etc. So I think Apple is kind of feels like, they have multiple angles of growth. So from that standpoint, even if you try to bucket each of those revenue opportunities, each of them has a different growth profile. Each of them has a different multiple profile to our valuation profile. And then you take all of that, you can argue hey, it's kind of expensive relative to your hardware stock. It's cheaper than a software stock. But then the reality is then you add another layer, which is the free cash flow yield. Given the cash flow generation of this company, I think it kind of makes it look still relatively inexpensive on many of those metrics. And the other thing I'd also say is that, besides the monster beat and the impressive numbers, I think just the scale of the company is very impressive that people tend to forget that, in the nitty-gritty of things.
Shepard Smith here. Thanks for watching CNBC on YouTube.